Okay. Hello, guys. Sunday, Sniper Sundays. You already know what time it is. Let's just quickly go through what I've been looking at over the last week or so. This year, actually, let's actually check because I haven't posted new trades in a long time. As you guys now follow my trades and just actually wait for them to actually be finished before I post new ones. As you can see, I always update them at the bottom, not Euro USD, because this is a pair I actually hates trading, but I always find good setups for other people. But if I just hit play on this, you can see the bias is still correct. I haven't updated this, but I probably should because I've kind of updated it for other people. I'll probably do that and post it after this session. But the bias for this is still to the upside. As you can see, the first entry I was hoping for to come into here and then head up. You probably, I don't know, if you took it initially, 25 pip stop loss, you probably could still be in. As you can see, it's literally 2 hour stop loss and then it went again. As you can see, it's coming to that same area again. And on my latest analysis, I actually show you exactly what I'm looking at for that. USD JPY, I posted this, when was this? November the 8th. We're now the end of November and it still hasn't played out. It's just kind of been hanging around here. As you can see, exactly this is my bias to actually head down to the downside. So we've got like three possibilities. So this one for 387 pips, this one for 666 pips, and then we've got the last one here where it could be 906 pips. I'll go into my charts now, and then you can actually see exactly what I'm looking at for these pairs. So last week, or as you guys know, I always focus mostly on gold. That's like 80% of my trading. Okay, so right now, I'm waiting for buy. So I think even on here, if I go on gold, so this is an example of me basically updating my ideas. So since I posted this on, again, the 8th of November, you can see I've been updating this as we go along until we finally get what we want. Okay, so in updating it, blah, blah, blah. So when was this last one posted? It doesn't even say a date here. I thought they usually are November the 18th. Okay, so I've been waiting for this whole setup to actually happen. And if we go into the current price right now, as you can see, it's still there. And right now, I'm just looking for a buy to the upside. And then before we see our big down move, that's what I'm waiting for into there. So I'm looking for a buy right here to fill this imbalance and then head up and then fill some more imbalance. And then we should get an entry off that last institutional play. There's still some imbalance to the upside here, but just due to the way market structure is currently, all my biases to the downside once this actually fills this imbalance right here. If we just use our fib, let's just get our fib right here. This was the last up move. And then if we just get our fib, I'm looking for it to kind of head into these areas before we head down, potentially even here to fill this imbalance because we still got this 88% fib level to be actually met. So this is still an area of interest. So this is why I've got these eyes here. Plus we've got some institutional play that actually happened there. We've got this imbalance right here, but just due to the market structure, I don't actually see it coming as high there because that means we'll break some more market structure. And then, yeah, that just kind of invalidates the whole thing. So right now, I want to catch a buy into there, which will be about 200 pips. And then we sell off. And then we should, well, once we do sell off, that should be a nice 500 to 600 pip move. And then from there, this is where I want to actually see us go very bullish on gold. And you're probably thinking, why is that? If I just go on the daily, again, market structure is market structure. So right now, on the bigger time frames, all of this is just a pullback. On the smaller time frames, you're thinking, oh, it's an uptrend. No, it's just literally a pullback on a bigger time frame, but it's taken forever. As you can see here, well, since we had that bullish run, and we had the highest high over here, which was on the 4th of September, and since then, everything has just been a pullback on a bigger time frame to actually reach this level here, where we've got some institutional play. Okay, so if I just highlight this, so we've got some institutional play right there. Make that green and do it actually properly. Okay, so the first one was met. The first one was met, as I pointed out on here. The first one was met, and I said, yeah, we should bounce up from there, and we did. And then we came back again. So now I want this move to happen where we'd actually come down lower right here and then head all the way up because on there we've got imbalances to fill and we've got the D1 open order. So how far back did I actually scroll back for this to find this? And this is why I actually say always focus on no more than 3 to 4 pairs for the whole week. Because when you can actually focus your energy on these pairs for the whole week, you can actually follow the whole move and understand what you want from it, where you expect it to go, and then actually move on from there and take trades. Okay, so right now we're in uptrend. So all of this is a pullback, like I said, it's just creating a flag, and then we should see another impulse to the upside. And this is why I'm waiting for all of this to happen. So on a bigger time frame, I'm waiting for a buy from that area. On a smaller time frame, if you go on H4, I'm waiting for a buy from here, but I also know it's just a pullback to come down into the area I actually want to buy long from. Okay, so that's what I'm looking at for gold. What else are we looking at? US oil. Caught the cleanest of entries on this on Friday. This is one that's been playing with me for a long time. First, I caught an entry from here. It went down, came back up. Caught the entry again. It went down, came back up. Didn't hit my stop loss because I got back in again and left it just above there. Caught it again, and then I missed this buy, and I probably could have caught it, but missed it. It is whatever. And then Friday, caught this sell. Okay, so right now, it's currently going to pull back what I expected to. So you can see here we had an 8 pip drawdown, and we made 115 pips from it. So my first TP was hit, and then now it's just kind of pulling back. If we go on a smaller time frame, you can actually see, yeah, just kind of pulling back to fill this imbalance potentially. And then maybe this institutional candle right here to actually head back down. But we'll see when the market opens. But that was a clean trade. We had a not 0 pip, 8 pip drawdown. And then you can see I caught the initial sell from here, came back, sold it again. And then, yeah, so we managed to catch this a couple of times. So long term, what I'm expecting it to do is just literally come down to show these imbalances and then potentially head up, because we're looking at market structure. All of this is an uptrend right now. Okay, all of this is an uptrend right now. But if we go to a bigger time frame, what can we see? Bigger time frame is literally just a pullback. Okay, so this is my bias for it. I want it to come all the way down to here. Okay, because if you're looking at this, it broke structure here. You might have thought it was an uptrend, but that was just institutional candle doing its thing, wiping out all these equal highs. Okay, and then if we get a fib from there to there, you can see we're now just pulling back into this range. Okay, 50% of this institutional candle, and then we should see this head right down. And if we're kind of doing a measured move based off this, then from there to there, okay, so you should see it heads into our 27 minus 27 area, and it could potentially go into our minus 61 area. So a measured move from there doesn't look too bad. Okay, so if we wanted it to be perfect, maybe it might come a little bit higher to the 70% level, and then that would be a perfect kind of measured move. But right now, my bias is this 50% of this candle to head down. So we'll see, but I'll keep an eye on this level right here. Let me just actually mark that out for my own reference when I look at this chart again. And let's just mark that out. So I'll keep an eye on that. Okay, so that's US oil. I'm already in a sell for that. We want to take out these equal lows right here and wipe out that liquidity, and then head into this area right here where we've got an open order on the daily. And we want to mitigate out of that, and then we'll decide what we're going to do from that point on. Okay, I already know my bias for that, but just quick sessions that I like to do on here on a Sunday. So GBP, JPY, all the GBP pairs are looking exactly the same right now. Okay, so long term, this is what we want. We want it to kind of fill all these imbalances, come down into this area, mitigate out, and then head back up, because we know that just needs to be a pullback. Okay, that just needs to be a pullback because we're currently in an uptrend, and I still can't believe I missed this whole buy. But anyway, life goes on. And I missed it by 15 pips as well. I'll never forget that. My buy limit was just slightly lower into here. And then, as you can see, I think this was like 1,000 pips or something like that. Yeah, more than 1,000 pips. And I missed that in the whole thing because once it went, it just went. There was literally no place to get back in. Here, I could have probably got back in because there was market structure, but it's not my entry. So I just left it to do its thing. Missed out on 1,000 pips. But anyway, so you can see right here, on a bigger time frame or 4 hour right now, we just want this pullback into this area zone here, and then we want to buy again. Okay, so initially I wanted to sell from there to head down into this area, but the sell already started from here. So again, I missed a kind of perfect sell on that, but I managed to get back in from that area, and I'll show you where we're currently at. If I just zoom in actually. Okay, so we're currently here. So I managed to catch that sell from there. Very sweet. Last week, Monday or Tuesday it was, because I remember I was traveling to another city here in UK, in Birmingham. And then, yeah, caught that sell. And now we're at this pivotal level because we've got institutional play right there, and then we've got these equal lows, and it still hasn't taken it out yet. And you're probably thinking, why do I have this red arrow right here? And that's just basically it's breaking market structure to the downside. So now I know there's a shift in momentum to the downside. We've also broke it here. So 2 points of reference where market structure has been broken to actually head down to the downside. Okay. So I just do that just to understand where we're currently at. We've broken market structure once, twice. So this low has been broken. Now it's made a new low. And that one has been broken. Obviously, you can see that here. So right now, we're looking for a retracement into this area and then head straight back down. And you already know we use our minus 27 and minus 61.8 for entries and not entries, for take profits. As you can see, more liquidity has been grabbed here. So right now I'm looking to buy into there and then head straight back down. Okay, institutional play right there and then head straight back down. But the long-term bias, as I've shown you on a bigger time frame right there, is to head all the way back into these areas here to potentially buy straight back up. GP NZD, all these other pairs are looking exactly the same setup. We've broken these lows, 1, 2, but I'll just put it here, broken these lows. So now we know there's a shift in momentum to the downside. Now we're waiting for a pullback into one of these areas. The 88% Fibonacci level is something I was added on last week. Very, very good setup. So obviously you could pause the video and actually take that Fibonacci set in if you want. But 88% matches perfectly with our institutional play right here. So I'll be looking to potentially sell off there. Okay, and then again, minus 27, minus 61.8 is our TP levels. And why is that? Again, why is my bias like that? Because we've got these equal lows. Okay, so it could potentially just fall straight through, but right now, this would be the ideal setup that I'll be looking forward to if I wanted to sell, because I don't want to sell right there. That's just suicide. Okay, so it could fall straight right through here, but I want it to head into here, fall down, and then we break this level. Okay, we grab the liquidity from here, and then we start heading down to fill all these imbalances. And again, similar to GJ, the bias is just for it to pull back after that big impulse, and then we head straight back up into higher levels, and then maybe potentially see the lowest point that any GBP pair has ever gone. Okay, so all GBP pairs, this is my bias for them. I think they're going to be the lowest they've ever gone. Okay, you can see I've marked this out. Minus 27 and 61.8 is always our TP targets. So if I do this, look where minus 27, 61.8 are, and then look at the GBP chart. Okay, so this one started in 2002 and has never been this low before. So if technicals do work out, then that GBP pair will be the lowest it's ever been. GBP JPY, as you can see, I already marked it out there. I said lowest it's ever been. Exactly the same thing. It's never been lower than here, like never. The chart started in this one in 1993. Never been this low before. Okay, so we've got all this liquidity to take out. Okay, we've got all that liquidity to take out. And again, I'm not going to do that analysis of how I found that, but my bias is to the downside for that. What else? We've got GP AUD, exactly the same thing I just showed you with the other two pairs. Literally, all of them are exactly the same setup for this week. Okay, so this one could potentially go a bit lower before heading up, but we'll keep an eye on that. This one I wasn't too sure, so I'm just going to leave it. I'm just going to leave it for now and see if it actually does head down first before maybe pulling back and then heading down again. But again, bias is to the downside to actually recover that big impulse move. GPUSD, exactly the same thing. This one I know for sure should come lower before heading up, which is why I've got it marked up right there, because we've got the institutional play right here. Okay, we've got institutional play right there. We've got imbalance right there, gap in the market. There's so many different things to it. Okay, so I wanted to head down, and then we should see a pullback and then break that level and then head all the way down to here to actually mitigate out. Okay, so exactly the same kind of setup. All of them are looking exactly the same. Okay, and then head back up into the weekly open order and then see potentially the biggest fall we've ever seen in a GBP pair. And then the last one for this week is JER30 or DE30, whatever you know it, the DEX. I don't know what you know it as, but this one is looking very, as you know, these pairs are crazy. Like it's similar to the US 30 or Dow Jones, whatever you want to call it. It's very similar. As you can see here, we're looking at 12,000 pips if it does play out. 12,000 pips. let's say you even caught 200 or 400 out of that. Let's say you even caught it and it drops to, let's say even this low right here. You just caught 2,400 pips. If it drops to this low right here, then you've caught nearly 5,000. Then this low right here, 6,000, you get the point. But my bias is for this to drop all the way down. As you can see, we've got some institutional play right there. Okay, so equal highs wiped out, headed back down. Now I'm making a flag, and then we should see a sell from somewhere around here. And if it does play out, how low could it go? I don't know. Let's just try these lows right here. Okay, so that could be 12,000 pips, and then if we catch the buy, then we're looking at 16, nearly 17,000 pips. Okay, so this alone could literally pay you for the whole year if you focused all your energy on it. Okay, so we're in an uptrend. Okay, uptrend, and this high has been broken. Okay, so I see this with my eyes, so I don't have to mark it out, but when I'm explaining, I'm like, oh yeah, let me draw this out. Okay, so I just see this in my eyes. I already know it's made a low here, a high there, low here, high there. So we're waiting for another pullback potentially. So we should just see it. This is why I've already marked this out. So my fib levels. So we're waiting for around this area. We've got some institutional play as well. So yeah, I know I'm just waiting for a pullback now, and that pullback is going to be 12,000 pips. And then from there, they head into our minus 27 level as our TP, and obviously TP2 would be the minus 61.8. So that's what I'm looking at for the next couple of weeks, the months. I don't know. Maybe I might just trade J30 for the rest of the year and just call it a day with gold, US oil, and all these other GBP pairs. But pips are pips, so we keep pipping. But yeah, that's it from this week. Like I always say, follow me on TradingView, follow me on YouTube, follow me on Instagram if you have any questions. If you want to learn the way I trade, you want to find out exactly what's happening and how you can actually improve your game. And I know there's people that's watching these videos that only like to learn for free on YouTube and don't want to pay any money. But I'm going to tell you this now. If you keep going that way for the rest of your trading career, what you can learn in a year or two is going to take you 6 years, because yes, I know I'm showing my analysis and what I'm looking for, but you don't know why. You don't understand exactly what I'm looking for, because I'm not going to say that for free, because I know there's people that want to learn but not willing to invest in themselves. So if you want to learn properly, definitely feel free to reach out to me. And believe me, investing in yourself is going to be the best thing you're ever going to do, because you're going to speed up your learning. And then on top of that, you're going to have an understanding of the chart. So let's say for whatever reason, I stopped making videos on YouTube and you follow me religiously. What are you going to do then? You're going to think, okay, now I need to find someone else. And someone else you find might not be as good. They might be better, but the way I explain things apparently is good. So you might find someone that is good, but they're not good at explaining things, if you get what I mean. So the best way to actually invest in yourself is actually learn for yourself. So you're not relying on no one. You're not relying on signals. You're not relying on anyone making videos on YouTube, all these kind of things. So yeah, you get the point. Just feel free to reach out to me if you do want to learn properly, and I'll show you a way, and I'll show you a trading plan. I'll show you trading strategies. I'll show you a compound plan that you can start from £100, $100, whatever it is. But believe me, investing in yourself to learn is going to be the best thing you'll do for yourself, for your family, for a family that you're planning to have, for all your future goals. Just learn for yourself. On that note, we're going to call it a day. And thank you for joining me on this session. And then, yeah, like I said, feel free to hit me up on YouTube, comment. My Instagram is always going to be posted there. If not, just go to previous videos and you find it there. And then, yeah, we'll get in touch if you do need some help or just any questions you want answering. Take care.